Good day, guys. This is John Eliades, the owner and founder of the IE International Group of Companies and your business success strategist. So have you heard lately that the politics in America, and there was a news network that were sent out that Donald Trump only paid $750 taxes for the year. And everyone is going crazy. Now, I don't know really if that is correct, if that is not correct, but one thing I can say for certain, it is incorrect that that was the total taxes that he paid. Maybe they were referring to income tax. But if you just look at one of Donald Trump's properties that he owns on Trump Towers in New York, right? He pays property tax, like we rates and taxes, property tax, $11 million on one of his properties. So why is it such a problem when they made such a great fuss, such a big fuss, that people do not pay tax? And he's a businessman and he's meant to pay tax. Now, what I want to speak about is, how does taxes work, and should you be paying tax, and should you not be paying tax? The one thing that we need to understand, guys, you get tax avoidance, okay? That is, you are trying to avoid tax. You are doing certain things to purposely avoid tax, okay? And then there's tax planning. Tax planning. If I really want to be a great chartered accountant, I need to help my clients pay at least tax possible, but not through tax avoidance, but through tax planning. So you got to understand on where do you get taxed, what vehicles are taxed more and taxed less. So if you actually had to think about it, now they're saying Donald Trump only pays $750 tax. Now, what tax are they referring to? What tax are they referring to? Are they referring to his income tax? Are they referring to his property tax? Are they referring to his company tax? What tax are they referring to? And it is the same thing that you need to do as a business owner. You need to plan your stuff. I've always said that wealthy people, rich people, pay the most tax, but they pay the least tax in a percentage wise. They pay the most tax maybe as an amount. So you'll hear someone who's wealthy and he paid $6 million for taxes for the year. Now, you'll say that is a lot of tax, okay? But then you will see an individual employee who earns a salary paid 60,000 Rand tax. But the difference is 60,000 on what? 6 million on what? People always, another thing where in businesses, people say that is expenses. Those expenses of that business is very high. Expenses mean nothing if it's not relative to income. You've got to go look at what is the income of the business and what were those expenses relative to that income. That is how you see how expensive something is. If you were earning 10 million Rand for the year and you had 9 million expenses, those expenses will be high relative to the income, right? But what happens if you had 90 million expenses, but you made 2 billion Rand? That is different, okay? Expense is relative to income. Why do you create an expense in your business? It is to create income. So when you're a businessman, you've got to say, how do I justify that expense? If I'm sitting with you and I'm consulting in your business, how do I justify that expense? It's the same thing with your taxes. You've got to understand, where are you taxed? Now, an individual person, there's a sliding scale. If you're an individual person, there is a sliding scale of tax. You have a rebate you get a rebate of tax, and you are taxed 18% to 45% as an individual. So you go and you say, listen, I earn 10,000 Rand, 10,000 Rand times your 12 months, right? That's 120,000 Rand. You're going to earn 18% because up until 250,000, you get taxed at 18%. Anything above 250,000, then you go to 25%. And it's a scale up to 45%. So rich people who earn 1.5 million and more, they're going to be taxed at 45%. So the more you earn, the more tax you pay. So, but there are juristic vehicles, companies, trusts that get taxed at less. If you go open a PTY Limited, you get taxed at 28%. Now, the big thing that people don't understand is because they get taxed at 28%, they think, 28% is cheaper than 18 to 40%, 45%, depending on how much you're earning. But what people don't understand is you still have to draw your money out of the company. So although you get taxed at 28%, you still have to draw that money out your company. And to draw money out of a company, there's only two ways you can draw money out of a company. You either earn a salary, okay, or you draw dividends. You can't draw loans because the SARS, the Revenue Service, believes that when you can't take money out your company because that is called a deemed income. So what does this mean? You can never owe your own company money because that is called a deemed income. Okay? So in order to take your money out, if you earn a salary, you're going to pay 18 to 45% tax. So you're going to add it onto that. If you want to take dividends tax, you're going to go and pay, this is company tax. This is company tax. Okay, and this is dividend tax. That is dividend tax. And when you take this money, remember, you can only take dividends out of your company on money that you've already paid tax. And money that you've already paid tax, you have to pay VAT 15%. You have to pay VAT 15%, okay? So if you really look at this, you are paying 63% tax. You're paying 63% tax to take money out of your own company. So for every 100 Rand that you earn, you have to pay tax to take that money, to use that money to buy something. You have to pay 63% tax. Now, a lot of people are using vehicles and trusts. If you have a trust that earns income, let's say you have property in a trust and you have beneficiaries, let's say you have a child, your child 1, child 2, and you have your wife and you have your husband, and this company now this trust earns revenue, you can give each of these people, if you're giving each of these people 70,000 Rand distribution, as long as this trust has a property or something that is earning money, and you give each of these kids and a distribution of 70,000 Rand, up until 70,000 Rand, there is no tax, so you're taking this money tax-free. But you've got to have your structures there. You've got to have assets in your trust. Now, another thing that people don't understand, have you ever heard the two things that are sure in life is what? It is death and taxes. Now, what do most government want from you? The government wants you to own a house in your own name. The banks want to finance a house in your own name because it's easier. You get a pay slip, you sign personal surety for that house. It's easier to get finance. But here comes the problem. You see, when the house is in your own name, that house goes up in value over the years. So if you bought that house 10, 15 years ago, if you bought that house for 1 million rand, in 10, 15 years time, that house might be 6 million rand. And that's exactly what the tax authorities want. That's exactly what SARS wants. Because the higher that house grows in value, the one thing that's sure is that you will die one day. And in additional to all these taxes, you are going to go and have estate duty tax. Okay, and there is rebates on estate duty tax, but estate duty tax is 20%. Then you're going to have transfer duties. Transfer duties, because you've died, the house has to go out of your name to your beneficiaries, your children. There's transfer duties tax. And there is also capital gains tax. Capital gains tax of 20%. So, if you do not understand taxes, you can never have a great business. If you cannot understand taxes, because you are paying 63% tax just on your income if you have a company. When you die, the whole estate that you've earned, everything that you've earned, you're going to go pay estate duties 20%, you're going to pay transfer duties, you're going to pay capital gains tax. So if you don't take the time to get someone who understands taxes to build your empire up, that you do not fall into the trap that the government wants you to fall into, then you are going to find yourself paying taxes and you're going to leave this burden for your children. So you've got to understand taxes, okay? You've got to understand now, you've got to get yourself around people who understand taxes if you don't understand it. And don't make yourself think that you know everything. Go get a specialist to come in, look at your portfolio, look what taxes you're going to pay, or else you will be working your whole life. You'll work your whole life to build an empire, to build a estate, to buy property, that you will one day go and give it all in taxes. Now let me tell you this. What do you think happens one day when you don't have the money to pay the taxes, but you have the properties? The government will sell your properties to pay the taxes. So you've got to understand taxes. You've got to understand business. Now, Donald Trump understands business. He has set up his empire and he understands business, and he has structured his companies so well that he pays as least possible taxes. Now, is that a bad thing? Is that a bad thing? Hang on. Donald Trump told Joe Biden in the debate that, but didn't you make these rules? Didn't you draft all these tax laws? I'm just playing by the game that you've drafted. And there's nothing wrong with that. That's not illegal. The tax authorities do the tax laws, and you've got to play according to the rules. That's how it is. And if he's playing according to the rules and not doing anything illegal, that is where you congratulate the guy and you say, well done. You see, the tax laws are also designed for wealthy people to make money. Because if they make money, then they will invest in the economy. They will invest in the country. If they're making money, they will have the deposit to buy the new business, buy the property, open the factory, set up manufacturing companies within that country, within the province. That's why if the countries start lifting taxes all the time, that's why Donald Trump's a genius, because he's dropping taxes, he's bringing back the jobs into America. They're building up factories, creating jobs, creating wealth, and those people are paying individual taxes, and individuals pay the highest taxes to the government. Not wealthy people as a percentage, but the individuals pay the wealthiest taxes. That's how it is. There's no tax deductions for people who are employees like business people. Business people claim a lot of tax deductions on their expenses. So guys got to understand how the game of business is played. And the one fundamental thing in business is taxes. And if you don't understand how to make taxes work in your favor, the government wants you to buy business. The government wants you to give jobs, have more people, and the government will even give you rebates. In our country, we get rebates for hiring youth, young people. We will get rebates. When you go build, the one thing they don't speak about is when you go build businesses in underdeveloped areas, the government wants you to go do that. They will give you tax rebates for you to go build businesses in underdeveloped areas, give jobs for youth, build businesses, help suppliers up. That's what happens. So guys, you've got to understand the taxes of businesses. That's how you build great businesses. Okay? Thank you very much, guys. This is John Eliades, your success strategist, and I will see you at the top. Cheers. Bye.